Hi everyone, and welcome. Today we are diving into a topic that affects nearly everyone, the modern banking and financial system. Whether you've got a credit card, a bank account, or even just a piggy bank, money plays a massive role in our lives. But have you ever stopped to think about how this system actually works and how it impacts us, both as individuals and as a society? Before we get started, let me say this up front. This video is for informational purposes only. It's not financial advice. If you're making big money decisions, always talk to your accountant or a financial expert who can help you personally. Alright, now that we've got that out of the way, stick around until the end because we're going to uncover some surprising truths about how the financial system works and what it means for all of us. Let's get it started. A brief history of banking. To understand the financial world today, we need to take a quick trip back in time. Long before banks existed, people traded goods directly. You'd give me some grain and I'd give you some cloth. Simple, right? But as communities grew, this system became tricky. What if you didn't need my cloth, but I really needed your grain? That's where money came in. Money made trade easier. You could exchange coins and those coins had value. Fast forward a bit and people started keeping their coins with goldsmiths for safety. The goldsmiths gave out receipts for the coins and soon those receipts started being used as money themselves. Back then each receipt was backed by enough gold or assets to match its value. But over time things began to change. Financial systems started to realize they didn't need to keep all the gold or assets behind the receipts. They began printing more money than they had in reserves, creating wealth out of thin air. And in today's world, we've gone even further. Most money isn't even printed anymore, it's all digital. Banks can create money with just a few keystrokes, and the system keeps growing. This shift has made the financial system more complex and in many ways more fragile. But how does it all work today? Let's explore that next. The mechanics of the modern financial system. So how does the financial system work today? Let's break it down simply. Banks and financial institutions make money by lending money and charging interest. For example, if you borrow $1,000 from a bank, you might end up paying back $1,200 over time. That extra $200 is the bank's profit. Credit cards are a great example of this system in action. When you use a credit card, you're basically borrowing money from the bank. If you don't pay it back in full by the due date, you'll get charged interest sometimes as high as 20% or more. Over time this adds up and it's one of the main ways banks make money. Now here's something most people don't know. Banks don't actually keep all the money you deposit with them. They use a system called fractional reserve banking. This means they only keep a small fraction of your money in reserve and lend out the rest. So if you deposit $1,000, the bank might keep $100 and lend out $900. This system allows banks to create more money in the economy. But it also comes with risks, especially when too many people want their money back at the same time. The hidden costs of gaining money from money. Now let's talk about one of the most controversial aspects of the financial system, the idea of gaining money from money. At first glance, it sounds like a smart strategy. Banks lend money and make a profit through interest. Investors put money into stocks or real estate and watch it grow. But here's the thing, this system isn't as harmless as it seems. When money is used to make more money, it often benefits those who already have a lot, while making life harder for everyone else. For example, let's look at interest. The wealthy can lend their money or invest it and earn returns. Meanwhile, people with less money often have to borrow just to make ends meet, paying high interest rates that can trap them in a cycle of debt. Consider this. The global household debt is now over $300 trillion, and with credit card interest rates averaging 20%, many families end up paying far more than they borrow. This creates enormous financial stress, which has been linked to anxiety, depression, and even higher divorce rates. The cycle of debt doesn't just hurt individuals, it hurts society too. When people spend most of their income paying off interest, they have less to invest in their future. Things like education, healthcare, or starting a business. So, is it fair to say that gaining money from money comes at a cost? And is that cost something we can afford as individuals and as a society? Keep watching, because in the next section, we'll explore how this system impacts our daily lives even further. How the financial system affects mental health and families. Let's get it personal for a moment. Have you ever felt overwhelmed by money worries? Maybe it's an overdue bill, mounting credit card debt, or just the general pressure of trying to make ends meet. If so, you're not alone. Financial stress is one of the leading causes of anxiety and strain on families around the world. Over 60% of Americans report feeling stressed about money, according to the American Psychological Association. And here's another shocking fact. 1 in 5 divorces is linked to financial conflicts. Think about that for a moment. Money problems don't just affect your wallet. They can ripple into every aspect of your life, including your most important relationships. It's not just relationships that suffer. Constant financial pressure takes a toll on mental health. Anxiety, depression, and even physical health problems often stem from money worries. And when people feel trapped in debt, it can lead to feelings of hopelessness, even in extreme cases, suicidal thoughts. But here's the good news. There are ways to tackle this. In a later section, we'll talk about practical steps you can take to reduce financial stress and regain control over your money. The broader impact on society. Now let's zoom out and look at the bigger picture. The financial system doesn't just affect individuals. It has a massive impact on society as a whole. One major issue is wealth inequality. Over time, the gap between the rich and the poor has been growing. Those who have money can invest it to make more money, while those without wealth often end up borrowing just to survive. This creates a cycle where the rich get richer and the poor get poorer. For example, did you know that the top 1% of people in the world own almost half of the planet's wealth? Meanwhile, millions struggle to put food on the table or pay for basic healthcare. Another issue is how this system impacts small businesses. Many small businesses rely on loans to get started, but high interest rates and fees can make it almost impossible for them to succeed. Instead of thriving, they end up closing their doors. And then there are public services. When governments rely on borrowing to fund things like education, healthcare, or infrastructure, they're also paying interest. This means less money goes to actual services and more goes to financial institutions. So the question is, how can we build a system that works for everyone, not just the wealthy few? Breaking the cycle. A path forward. Now that we've covered the challenges, let's talk solutions. How can we break free from a system that seems designed to keep us stuck? First and foremost, avoid credit cards at all costs. Yes, they might seem convenient, but the hidden harms are immense. They trap you in a cycle of debt with high interest rates that make it hard to get out. Don't let banks and financial systems fool you with their offers of rewards and cash back. It's a trap designed to profit off your hard work. Also, stay away from borrowing money that allows lenders to profit off you, even if it seems like the only option. Believe me, the hidden costs are not worth it. By avoiding these traps, you will save yourself from falling into a terrible rabbit hole of debt and stress. Here are 3 practical steps to reduce financial stress and regain control over your money. Live within your means. Avoid spending more than you earn, and think twice before taking on debt. Remember, not all debt is bad, but unnecessary debt can weigh you down. Build an emergency fund. Start small, even $10 a week, and work your way up. Having savings can give you a buffer when unexpected expenses come up. Educate yourself. Learn about personal finance. There are free resources, online courses, and even apps that can help you understand your money better. Take Sarah, for example. She was $20,000 in credit card debt and felt like she'd never get out. But by creating a budget, cutting unnecessary expenses, and focusing on paying off one card at a time, she became debt-free in just 3 years. If she can do it, so can you. On a larger scale, we need to rethink how the financial system works. Here are a few ideas being discussed. Fairer lending practices. Reducing interest rates for essential loans, like education or small business loans, can help level the playing field. Promoting local banking. Community banks and credit unions often prioritize their members over profits, which can make them a better option than big banks. Encouraging transparency. Making it easier for people to understand fees, interest rates, and loan terms can help them make better financial decisions. Change won't happen overnight, but every step we take, as individuals and as a society, brings us closer to a fairer and more sustainable system. So, where do we go from here? The financial system is far from perfect, but understanding its flaws is the first step toward fixing them. If you found this video helpful, share it with someone who might benefit from it. Let's get this conversation started. And if you have your own tips or ideas for improving financial health, drop them in the comments below. Together we can create a future where money works for everyone, not just a privileged few. Don't forget to like, subscribe, and hit that notification bell so you don't miss any updates. Thank you for watching, and I'll see you in the next video.